The meltdown across global equity markets is casting a spillover effect on the crypto markets as well, with the global central bankers turning hawkish to abate inflationary pressures. Lack of liquidity is resulting in fund vacuum in the crypto sphere too. Reduced risk appetite, coupled with strengthening dollar, has also made investors exit crypto funds, with outflows surging over $100 million last week. That apart, popular assets like Bitcoin, Ethereum, Tether, Dogecoin, and Shiba have shed up to 33% in the past 7 days. According to CoinMarketCap.com, the market cap of crypto markets has shrunk from $2.97 trillion seen in November 2021 to about $950 billion now. Analysts believe that the macroeconomic stress and movement of money towards safe securities like government bonds in a rising interest rate sphere is contributing to the carnage of crypto assets.
So yeah, crypto markets broadly, including Bitcoin, Ethereum, have been seeing a correction over the past few months, and I think it is primarily because of two factors. One, the macroeconomic market situation, where there are increased interest rates, increased repo rates, and we are seeing a lot of capital moving away from private markets towards government bond, treasury bonds, and hence we are seeing price correction across all asset classes. And I think the second is market cycles. So crypto as an asset class has been on a bull cycle for the last few quarters. I think we have now entered into a slightly bearish market, which in my opinion I think will continue to be the way forward in the near term.
It all began with the Luna Terra fiasco. The Black Swan event wiped out over $40 billion in market value after investors flushed out stablecoin Terra USD. To add to the pressure, leading global crypto lender Celsius Network halted all transactions and withdrawals between accounts to stabilize liquidity. In yet another development last week, a large cryptocurrency hedge fund is rumored to be facing a $400 million insolvency test. Grapevine hints that the company's investment was wiped out in Luna. Meanwhile, US crypto exchanges like Coinbase and Gemini have reportedly laid off 10 to 18% of their workforce due to weakening economic backdrop and crash in the crypto markets. With the US Fed hiking interest rates, volatility in the crypto markets is here to stay. Indian investors, on their part, have been passive for months.
It's a combination of two things. One, of course, is the global markets. Things like stuff like inflation, interest rates, recession. All those factors come into play. And two is India specific, the new tax rules, plus how the government decides to treat the entire crypto sector in India. The new tax rules have been notified. The new budget, the last budget gave 30% tax as well as a 1% TDS, which is a blow to the crypto industry. And also, banks are a little reluctant to work with crypto exchanges, as a result of which most of us don't have any banking channels for customers to buy, transfer money to crypto exchanges and buy crypto from. Which is a result of which is why the volumes of most exchanges have fallen recently. So unless these two factors improve, the outlook looks a little difficult.
Today, the US markets will remain closed on account of Juneteenth holiday. Later this week, investors will track the UK's retail inflation figures for May, the US manufacturing and services PMI for this month. Back home, oil prices, bond yields trajectory, and stock-specific action will guide the equity markets.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
तुम इतना डर गए?
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है. Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.